And there you have it. The markets are officially closed on this Wednesday, January 15th. Hello, investors and traders. I'm 𝐓𝐫𝐚𝐤𝐬, and this is a daily candle chart of the Dow Jones Industrial Average ETF, ticker symbol DIA. Keep in mind that the CPI numbers came out, and while the markets did a great job rallying for the bulls, at least in the short term, the CPI numbers are still showing inflation is on the rise. And with the new president coming in next Monday and Elon Musk and 𝐊𝐿𝐴 Ramaswamy getting ready to cut all those government jobs, it's going to be a very interesting next couple of months as we look for the markets to see if we get continued selling with lower highs and lower lows. Taking a look at that candle right there, that is a spinning top. That spinning top stopped dead in its tracks right at that resistance area from back here in December. So again, with that gap up today, the gap below the market is going to act as a price magnet. So with the increase in volume, we might see a little bit more of a push higher, possibly to this high here. Again, that was around December 10th or so. And then I believe we're coming right back down. This is what I normally see as a bull trap. Gets people really excited, short-term knee-jerk reaction higher, and then what happens? The option traders start to come in and they start buying up the puts and causing the gamma squeeze. So again, it's going to be very, very interesting to see how this plays out in the months ahead. But I'm going to keep that downside target in place, and then I'll readjust my targets for next week when the time comes. If you look, today's price target finally hit the target from the week before last. We missed that one by pennies. But I'm keeping that downside target down there on the diamonds, right there at 415.35. Looking at IWM, we did hit the downside target as I forecasted last Friday. So we hit that target. And again, we have a hanging man candle. That's a small body candle with a shadow underneath. Now, again, keep an eye on the gap below the market. Keep an eye on the CCI down here. It's almost overbought. We might go a little bit higher, but then again, you've got this roll reversal right there. So we might bump our heads against that former support right here, which was broken on that big red candle, is most likely going to hold as resistance. Again, a hanging man candle is bearish 80% of the time. It looks like this. It's got that long shadow underneath the small body. It doesn't matter what color it is, but it generally results in lower prices 80% of the time. Looking at the 𝐞𝐞𝐞, which is the tech sector right here, we did hit that downside target from last Friday's report. We did hit the upside target from the week before that. We're about to cross the momentum line, so this is going to be a little bit different. I think the Qs actually could wind up a little bit higher than that 20-period moving average, and then I think we're going to turn right back down, which, if you recall, over the last 3 weeks, I've been talking about lower highs followed by lower lows. This still is very much a downward sloping channel. That is, in my opinion, the beginning stages of a bear market. So keep an eye on the charts there as well. Looking at SPY, that is the ETF for the S&P 500. Again, another gap up. We hit the downside target here on Monday right out of the gate. We have the oscillators going up. We could go up and test that high from last week. So keep an eye on that. And then again, I think we're going to turn right back down on SPY. Finally, the VIX. You might recall that I put an extreme and aggressive upside target on that at 27. I do think that that will ultimately hit at 27. Keep your eye on the CCI down here, because look what's happening. The VIX is having a hard time on the CCI going oversold. I'm not saying it can't do that, but since early November back here, it has not really sustained levels in that oversold area. So this, again, is going to be very, very interesting. Could the VIX go a little bit lower tomorrow, perhaps Friday? Yes, I think it could. But then again, watch out, because the VIX is inversely related to the S&P. For the most part, each time you see the VIX rally, you'll see the S&P drop. One more point. We're watching the dollar fall. We're watching the yields on the 10-year futures here. Big red candle. What did that do for the precious metals? We'll take a look at silver. I love silver. Silver is up almost 3% today. I'm still a buyer of silver. I still think that we're going to go higher. Tomorrow, I'm doing an online interview with a precious metals company. So once that's done, I will post that to a link on the Friday report so you can get an eye on what we're talking about with the precious metals. Remember, tonight is Wednesday night, rapid fire stock analysis. We will go over at least 50 stocks in that hour, and we're having a great time. That session, we're hitting very high percentage of target hits on those stocks that are submitted to me by our members. If you want to participate in that, just go to the link below. There's a free 15-day trial that we are carrying over into 2025. Absolutely free, no strings attached, no games played, no credit cards taken. And I give you my word, there is no sales pressure that goes on at Sticky Trades. We want to build a relationship with you. In order to do that, we have to show you exactly how profitable we are and showing our members how to trade these markets using the charts. So that's it for now. Have a good rest of the evening, and I'll talk to you on Friday. So long.